Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Tranching the investment means breaking it down into tranches or rounds. Tranche comes from the French word meaning slice. Investors find it advantageous to break their investment into rounds. In the angel world, many investors break their allocation to a startup into 2 rounds. The first round goes in at the beginning of the investor engagement. If all goes well, then the investor puts in the second round. If things don't go well, then most likely they skip the second round investment. This reduces the investor's risk in the deal. It can also optimize the investor's return. The startup goes through ups and downs. During the down cycles, investors with dry powder can find more favorable terms. It's a good idea to save some of the allocation for an opportunity that provides better terms for the investor. As an investor, consider how to tranche your investment into the startup to balance risk and reward. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.